talking a bit about Bitcoin, gold, AI, speculation around it all. We've seen obviously Bitcoin price come off a huge amount, and all cryptocurrency has been absolutely slammed. Then we've seen gold go on a huge run along with some other precious metals, silver in particular, and then that's come off a fair amount in the last couple of weeks at the same time. And you got all this conversation around AI and tech and what's happening there. Yeah, what are your thoughts around some of that, really, around what's happening in the markets, AI, tech, gold, Bitcoin? I don't know where you want to start. What are you thinking about?
Well, to tie into the inflation thing, I've heard a few times the theory that AI is extremely deflationary. Hypothetically, it lowers the cost of everything because you're taking less people out of the cost equation. Things are automated. It's supposed to be deflationary. So I don't know, is that real or not? What else has happened in AI? Well, we've seen software companies listed on the stock market dramatically sold off, like 30, 40, 50%. Subscription style services have been sold off. And then even amongst the big tech players, there's been a lot of their share prices have fluctuated a lot because it's like, well, are these, like Microsoft, for example, are they beneficiaries of AI or are they actually in trouble because they're a software business and these AI tools can actually just build software for you? And
all right, welcome back to the Winners Playbook. Josh here with my regular co-host Billy, and today we're going to be talking a bit about what's actually going on in the world. There's obviously a lot of things, a lot of moving parts going on around the world at the moment, particularly in the Middle East, and we're going to be talking all things related to that, interest rates, Bitcoin, gold. We're going to be covering a lot. So it's going to be an action-packed podcast, and we're then going to leave you with obviously what we think you should be doing with your investments and your portfolios at this point in time. But before we jump into all the topics we're going to be discussing, Billy, what's the latest in your end, mate? I've only just returned from New Zealand, so I'm fresh off the plane. How's things on your end, mate?
Oh, I've just been here holding the fort, Josh.
Yeah,
myself and the rest of the team traveling all over the joint. So it's been nice and quiet in the office. Very quiet. You'll be pleased to know everyone's behaved themselves, working hard. How about you? Is this your first day back, is it?
First day back, yeah. I got home yesterday. What time did I fly in yesterday? Somewhere in the afternoon. I'll tell you what, I got into Melbourne Airport at like 3:30 and I was like, okay, this is peak hour traffic. This is not going to be good. Took me 90 minutes driving home. It was horrendous. Wow. So that was a pretty brutal trip. But I was just on the phone the whole time, so that wasn't too bad. I was able to get some things done when I was driving home. But 2 weeks over in New Zealand was plenty for me. So I had a little bit of a family trip. Then we had an advisor conference, which was cool. So I got to speak on a few different panels, meet some other advisors, business owners, and I had some good keynote speakers. So that was really good. Some good takeaways there to bring back for the business. And then I had a separate conference straight after that, a part of my EO or Entrepreneurs Organization group. So I had 4 days or so with some guys in New Zealand, Auckland as well, and got to meet some really good New Zealand businesses, some really big businesses down there as well, and got some good learnings and sort of experience shares from those guys and the businesses that were there. So all in all, a lot of key takeaways. And sometimes I think when you go on those sort of trips, it's like so many things sort of come at you at once, and it's like hard to sort of bring all of your thoughts together. So on the flight home, I made a spreadsheet and sort of broke it down into personal, business, and then the different entities, but predominantly the advice business, and just sort of put down all of my learnings and takeaways, because some of them are just like little action items, but then some of them are quite big to sort of put into place or discuss. So heaps come away from it, but most importantly, just need to take action off the back of it, which I'll definitely start doing as the weeks roll on. But it's good to be back, good to be home, because I've been traveling a lot this first quarter, and I feels like I haven't had a normal week, to be honest, in the office at all. So I've got
Can I just say, actually, that reminds me of something. There was someone who reached out for advice, and they contacted you, and then you wrote back and said, "Oh, look, I'm out of action at the moment. Do you want to speak to Billy?" So I spoke to this person who was interested in engaging us for advice, and he said, "What does Josh mean? He said he does lots of travel. Like, aren't you financial advisors? Like, why are you traveling?" And I was like, "That's a good question, actually."
It's too good.
Think of all the different reasons because you're in Philippines and New Zealand and I was trying to explain it. So I thought there's a bit of holiday in there, but then there's a conference about this, and I had to try and like explain while you're all over the place. So,
Yeah, well, it feels like I've been all over the place lately. So whoever that client was, not wrong. Not wrong. It's been lots has been happening. But yeah, for the most part, it is business. I try to bring the family where I can, where possible, but sometimes it's not easy when you're on those conferences because you kind of have them just by themselves. And Leon's only 16 months old, so yeah, not the greatest idea doing it
yeah,
that
I've
way.
been there. You get the message. Are you done yet? When are you done?
Yeah.
When are you coming back? Is it finishing
Yeah.
soon? Can you finish
Yeah.
early?
No, not ideal, but yeah, look, we've got a lot to cover off, and I think where we might start, Billy, around interest rates. Obviously, we've had 2 rate hikes here in Australia after having some rate cuts, and the expectations all were, 6+ months ago, we were on the way down, and now it has completely been thrown into reverse, and we're moving back the other way at a pretty quick rate. What's your views on that? I was actually just looking at the 30-day implied bond rate. So kind of looking at the market expectation for what the markets think interest rates are going to be doing over the next 12 months. And it's not a good graph. Like, it's going up, but this is not the type of graph that we want going up. So, in terms of where the cash rate is sitting presently, this has got the cash rate pushing up closer to 4.8% towards the back end of the year.
Now, that doesn't hikes.
Yeah,
couple more hikes. Yeah,
the markets are pricing in quite a few more hikes at this point in time. Now, it doesn't mean that, of course, comes into reality because it can change the other way pretty quick. But the markets are pretty set on interest rates are going to keep on moving at this point in time. But yeah, what's your view, Billy? And what are you telling clients when they ask you around interest rates? Should they be concerned, and what are we doing?
Yeah, well, I mean, as we know, it can just change so quickly. So to a certain degree, you don't want to try and predict things. I mean, we still have to try and predict things to some extent just so we can plan and make investment decisions. But we also have to keep in mind it can all change very, very quickly. So I'm telling clients, look, right now, it's very unlikely we're going to see rate cuts. I mean, that's just not on the cards at all. So we have to assume rates are going to stay where they are and maybe creep higher, and just factor that into our planning. That's about the extent of it. I mean, will the RBA raise rates? Maybe. I feel like it wouldn't take many hikes to cause serious issues in Australia. And it also doesn't solve the problem, because the current bout of inflation is primarily due to the oil price, which we have no effect on that whatsoever. Consumer demand is already weak. Business confidence is already weak. So there's no need to hike rates to try and slow consumer and business spending. They're already doing it, I think. So I don't feel like they can raise it too much more without just causing destruction. So my base case is, they'll stay roughly where they are, maybe creep up 1 or 2 more times.
Yeah, the markets right now, I'm just looking, it says here 72% chance of a rate hike as of yesterday at the next meeting to take the cash rate to 4.35. So the markets are up there at 2/3 at this stage. But I've seen that trend reverse pretty quickly. But and I was actually thinking about this in the last couple of weeks, around rate hikes as well. And I'm sure you'd know this, Billy. A lot of the people which are doing their spending, why is the Reserve Bank raising interest rates? They want to curb inflation and they want to tighten up people's spending, and that's one of the levers by way of which they can do it. But if you look at some of the data, a lot of the spending happens at the 50, 55 plus range, where a lot of the wealth sits in Australia. All the the boomers holding all of this property, and they've got all this wealth behind them. And then if you look at putting up interest rates to curb inflation and bring down some spending and pull the market in a little bit, those retirees actually, or those people in those positions, generally benefit from it, because interest rates going up means they're going to get a better return on their cash, and they're usually holding lots of cash or or term deposits or investments that are benefiting from higher interest rates. So it's this weird situation where sometimes the spending actually isn't slowing down, even though the interest rates are then going up, because you've still got this huge cohort of people that are sitting on cash and are actually benefiting from interest rates going up. Whereas, all of the accumulators or the young people are the ones that are then hurting, but it doesn't necessarily show in the data. So it'd be really interesting to see how that would look on an age graphic basis, because I would presume you would see a cohort of people when interest rates are going up between, maybe 30 and 50. Those guys are going to be probably contracting a bit and spending less. But then you're going to see probably the cohort, I would assume maybe 55, 60 and above, where on the higher end of town, where they're actually possibly going to be spending more, because they're actually making more money as interest rates are going up. So yeah, I was thinking about that in the last couple of weeks, that the way interest rates affect different groups of people, and trying to look at the data just in the way it's all lobbed together, it sometimes doesn't really do it justice, if that makes sense.
Yeah, well, I've heard this theory, like interest rate increases are inflationary to some extent. Like it's almost it almost makes the situation worse.
Yeah.
'Cause, the people over 50 with no debt, well, rate hikes won't stop them from spending money
No.
at all. So it
No.
only restricts, young families with home loans and businesses to some extent. Rate hikes will slow their spending, but if it's already weak, then more rate hikes it's not really going to help.
No, it's kind of like you're in the boxing ring and you've already been knocked down a few times and you're stumbling
Yeah.
around a little bit, and then you get a fresh opponent come in who's fresh and ready to go, and they just start batting you up even further. So no, it's certainly not easy. We know there's a lot of pain out there at the same time, but this whole concept of you in these times where there's lots going on, you can only control what you can control, and there's no point. I actually heard this analogy last week. We were down in New Zealand. We met a guy that's he's a pilot. He's got a bunch of different businesses, and he said, in times of distress, as a pilot, what do you do when you're going through turbulence? So it's like quite easy to focus on the weather of where you're, like what you're in, but when you think about it as a pilot, you can't do anything about the weather whatsoever. Like that's just, it's there. So you sort of focus on the instruments at hand, get your wits about you, and then okay, what are the actions, things that I need to take, and what can I do at this point in time to change the situation, because you're not going to change the weather. And that's probably the way that I think about with interest rates and inflation and everything else. It's kind of like it's all weather. You can't really do anything at all about it, but you can, think differently about your own life or make some change in your life to sort of fight back in a way and do some things for yourself or your family. So that's the way I like to think about that.
Yeah, 100%. Like the last thing on interest rates, there are other reasons to move rates you make a good point, but there's other things going on, because if it's about the value of our currency as well. So when our rates are higher, it often makes our dollar stronger,
Yes.
which helps ease the pain of because we import all of our oil. So we have a stronger Australian dollar, then we won't be as hurt by the cost of oil and fuel.
Yeah.
So they sort of have to raise rates. Otherwise it could be even worse. And also they need to slow government spending. We all know that's a huge problem. Our government is spending more and more money each year. So households are already tightening up. Governments haven't done their part yet.
No.
So hopefully hopefully a couple more rate hikes will shake up the government a bit, and maybe they'll slow down on their reckless spending, and maybe that'll help us all a little bit.
Chalmers got some work to do, I reckon. He's going to be ducking and weaving, and he's got some work to do. He's in the firing line.
His approach so far of we'll just do little marginal tiny changes here and there. I mean, there's some big changes needed. So we'll see.
Yeah. And we weren't even going to touch too much on currency, but it was funny. The first time I've been overseas where Australia actually, I was winning. We were $1.20 to the New Zealand dollar. So I couldn't believe it. I was like, okay, I'll just take a bit of money off whatever I'm spending. It's the first time I've been overseas where the Australian dollar's actually been stronger. So it was actually quite a relief, that. But it's a good point around the currency, because I think it's something we have. I don't know if we've covered it a lot on the podcast, but around that hedging of the investments, and something that we did in our portfolios, I think between 6 and 12 months ago, was tilt more of our international exposure towards the hedged investment options, with the view the Australian dollar was going to go up and rise. And you've seen a differential of at least 10% on a hedged versus unhedged option over that period of time. So, even though it doesn't look like much, the the Australian dollar going up a few cents relative to the US dollar, and it's, what is it, hovering around now 70 or 71 cents, I think, against the.
Yeah, it's dropped back a little bit this week, but yeah.
Yeah, it's it can, little things like that you don't even realize, but they do present an opportunity and do have a decent impact on your portfolio.
Yes, yeah, definitely. We have to keep revisiting that. Yeah, the
Well,
hedging versus unhedging. Yeah.
what about sticking with this sort of interest rate inflation piece? If we talk about the oil price, because obviously that's hurting a lot of people, and that's shot up, and everyone's feeling that at the Bowser as we currently speak. Yeah, what are your views around what's happening in the oil price and the sort of effect there with the markets? Because it sort of ties into a broader conversation around, the Middle East and everything that's going on over there, which, I know the Trump in the US or Israel have said that it's going to be short and sharp, didn't they say? I think 4 weeks. And, it's looking like it's obviously going to go on a lot longer than that, even though I think Trump come out and said today that the Iranians are begging for a deal, but you don't know what to believe these days. What are you thinking around the oil price and how that one plays out?
This is really interesting because up until a couple of months ago, the oil price was quite depressed. It was at $60 a barrel. And there was discussion that there's an oil glut, like there's too much supply of oil globally.
Wow.
And, we're moving to renewable energy. China especially has rolled out EVs very aggressively. So the demand for oil from China had dropped. And it was actually the point where there was a concern that the supplies of oil, like the big oil company, like the Middle East and so on, it was hard for them to even make a profit at $60 a barrel. So I was like, oh, maybe this is the end of like global dependence on oil and so on. And that changed so quickly with this war. And interestingly, how I did that US trip last year with Inside Network, and we got to meet a bunch of big fund managers. One of the most interesting sessions was this resources fund, the relatively small fund run by 2 guys in New York, and all they do is invest in resource companies. And they were maximum bullish on oil.
No kidding. Wow.
Old school. So they were like, EVs are bullshit. They don't make sense. They're going to be dead in 5 years. Everyone's going to go back to internal combustion engines, blah, blah, blah.
Yeah, wow.
And they were buying, and they're like, oil stocks are so cheap. But what everyone is not realizing is because the oil price is so low and it's not profitable, there isn't enough new supply coming in 6 months, 12 months. Yeah. And the demand isn't really dropping as much as you might think. So I looked at their fund, right? And it's got 20% of their fund is in like oil and gas. 20% is in gold miners.
Wow.
20% in uranium.
Wow.
And their fund has returned to 85% in the last 12 months.
No kidding. Wow.
And just these 2 guys. And one of the guys is like 70, 75 plus years old. This old school oil baron or pro fossil fuel guy. And I'm looking forward to seeing their March data, because that data, the 80% return, that was to the end of February.
Wow. Yeah, that would have moved. Are they holding much? Have they taken much investor money? Like, are they a big fund, or how any idea?
Well, because of their returns because obviously they got on gold early. So the last couple of years, like this guy's older, right? And he said he set this fund up, 25 years ago, whatever it was. And for years he struggled to attract money because of his philosophy. But over the last 2 or 3 years, their performance has been so good that they've just like taken off. Hence why they, opened up in Australia now as well. They've come onto a couple of our platforms here in Australia.
Interesting.
So yeah, on the oil price, it's fascinating because you hear these different narratives around what's actually going on. But all it took is, to knock out the Strait of Hormuz, whatever it is. All it took is to knock out that 20% of supply. And that's just completely, caused global chaos.
Yeah, you would think that if you take another view as well, you would think there would be a bit of a trade possibly in there. I know there's people would be loving this as like a trade, trading what's going on in the markets right now when there's all this volatility. But you'd like to think if the US does end up striking some sort of deal here in the short term with Iran, and the strait does open back up, the oil price, you would think for the most part will drop pretty sharp, pretty quick. Maybe not back
Yeah.
down to where it was, but you think it would move down pretty quick. So you definitely want to be careful around any trades around oil, because it could, mind you, it could also go to 200, because that's where I think Iran wants to take it. They want to take it to $200 a barrel. But I don't think the US or
Yeah, I
anyone's
wouldn't
going to
be
really
loading
allow
up
it.
now. Like, it feels like the horse is bolted if you think you're going to make money on oil stocks.
Yeah.
Of course, it could get worse and go higher, but
Mm.
it sounds like there is, I don't know. And like, I heard, just anecdotally, I heard of like queues of people at BYD dealerships. Like, this is a lot of people is now tipping them over the edge of wanting to buy EVs.
Mm.
And I imagine there'll be some countries that go, okay, we really need to address our dependency on oil and how much we have in stockpile and all that sort of stuff. So if the market will probably rebalance and the price will come down, I would think. But yeah, and that's the thing with inflation. Like, let's say that does happen, the Strait opens back up, market calms down, all of a sudden the inflation data could completely be turned on its head, and we could be looking at rate cuts.
Interest rate cuts on the cards. Yeah, no, you can definitely see how that plays out. And I actually heard this. Someone was telling me a conspiracy the other day that this is the whole. A lot of, like you were saying, a lot of demand going to EVs now because of what's happening with the oil price. And so the conspiracy is that I think the conflict happened so that all of these big electric companies and the governments are pushing more people to EVs. So that's why the war started. I was like, I don't know. That would be
a bit of a stretch.
I'm not sure. That's
that
idea that's out there. That idea, but look, even talking with the inflation, interest rate, the oil story, and everything there and in between, I think what a lot of people aren't seeing as well is it's definitely costing a lot more to fill up. And the one that I feel the most for as well is those that employ, like keep Australia and keep the world moving, is like business owners, and particularly small and medium sized businesses. And they're going to have to be looking at what they're doing for their staff in terms of what they're paying them and their pricing. And because on one side staff are going to be like, look, we're hurting, we're driving in and we've got to fill up our cars, we're spending rather than $100 it's $200 or whatever it may be. And it's like, okay, does the business then sort of soak that in? But then at the same point in time, their clients or their customers, sometimes through these types of situations, people do get a little bit more, they close up and they don't want to make change and they don't want to spend money. So that's why I worry a little bit, is around the small to medium-sized businesses. And I've seen it with, a builder talking about it yesterday in the building construction. Some of the costs there have gone through the roof lately. And a lot of those builders that are on, charging fixed price contracts, and then all this cost of supplies, et cetera, goes up by like a third. A lot of them are going to be underwater. So that's where I fear is around the sort of small and medium-sized businesses that might cop it on both ends of, employees, staff, contractors wanting more money. But then at the same point in time, you've got, customers and clients not necessarily wanting to spend it more or spend money. And you get sort of hit on two ways. And businesses generally hold debt as well. Like we have some debt, so you're getting hit with interest rates at the same point. And then you have a government or governments that don't really back small, medium-sized businesses whatsoever. And there's no major incentives there. And if you look at what's going on in Victoria, like I couldn't think of one like incentive that there is for small, medium-sized businesses. So that's one where I fear, Billy, is the small, medium-sized businesses that are doing it hard already, and then they're copying all of this and are expected in some situations to, help solve the problem. It's a worry.
I agree. And I heard that about like housing construction costs, because all the components, like firstly, obviously labor always gets more expensive, like the people involved, but all the components of building a house, almost everything's imported, and everything has to be transported, right, by sea and then on land, which that's all diesel fuel. So it's like all the input costs have blown out dramatically at a time where their profit margins were thin or non-existent anyway. So we all hope this does not go on too long, because it's going to cause a lot of damage.
No, definitely. Yeah, hopefully, short, sharp sort of trough here, and then we get back moving on. But if we keep moving on, talking a bit about, Bitcoin, gold, AI, speculation around it all. We've seen obviously Bitcoin price come off a huge amount, and all cryptocurrency has been absolutely slammed. Then we've seen gold go on a huge run along with some other precious metals, silver in particular, and then that's come off a fair amount in the last couple of weeks at the same time, and you got all this conversation around AI and tech and what's happening there. Yeah, what are your thoughts around some of that, Billy, around what's happening in the markets, AI, tech, gold, Bitcoin? I don't know where you want to start, but what are you thinking about?
Well, to tie into the inflation thing, I've heard a few times the theory that AI is extremely deflationary because supposedly, like it would hypothetically lowers the cost of everything because you're taking less people out of the cost equation. Things are automated. It's supposed to be deflationary.
Mm,
So I don't know. Is that real or not?
yeah.
That's one thing. What else has happened in AI? Well, we've seen software companies listed on the stock market dramatically sold off, like 30, 40, 50%. Subscription style services have been sold off. And then even amongst the big tech players, there's been a lot of their share prices have fluctuated a lot because it's like, well, are these, like Microsoft, for example, are they beneficiaries of AI or are they
Mm,
actually in trouble because they're a software business and
hmm
these AI tools can actually just build software for you
mm,
at a very low cost? So there's been wild swings in share prices of all those sorts of companies. Likewise with the big consultancies like Accenture and so on, same deal. They've been sold off 30, 40%.
hmm
So that's been wild and very difficult to predict how that will play out. Gold and silver, gold regained its status as like a safe haven over the last 12 months. Bitcoin has not done its job as a safe haven because that's one of the things it was sold as, right? Like
Yeah.
it's going to protect you from fiat currency. And that hasn't happened. Everyone's gone back to gold. So I don't know, man. What do? You stay highly diversified and you don't try and back one winner because these things are very unpredictable.
Yeah, Bitcoin
Yeah.
very
What
much
have you
a
seen?
yeah, I was gonna say Bitcoin very much a risk on asset. So with interest rates moving up and all of the turbulence that's going on around the world doesn't do any sort of wonders for those more risk on assets like Bitcoin and cryptocurrency. And yeah, people forget like there's still a war going on over in Russia and Ukraine that I don't know when is that going to end anytime soon. And yeah, sure you've got in Iran and hopefully that doesn't prolong. But God, I guess if you were betting, you'd think it's going to go on a while. If I was going to be betting one way or the other, but again, you absolutely never know whatsoever. But another one I would throw in there in terms of conflicts is the whole China piece, and obviously China's there. I'm sure backing Iran through all of this and providing support in any way that they can. But I was on a flight. When was it? I think about a month ago, and I was chatting to a guy that's a contractor for the Australian military, and we just got chatting, and we're somewhere down the back end of the plane, and we got chatting about what's going on around the world, and I was like, "What do you think about China and Taiwan? What do you think's going to happen there?" And he turned to me with full confidence and said, "Within 2 or 3 years, China will go Taiwan." And he said, "I was like, okay, what does that mean for Australia?" And he said, well, the US, because of where Australia's positioned, is actually going to be using Australia, the north of Australia, as its forward operating base and going to be launching out of Australia. And so I was
Oh
like,
no.
how good's that? Like, what, us as Aussies, we're going to be sucked into this conflict, and we're really not going to be able to do anything about it whatsoever. So again, it's just a thing. It's coming up. It's going to happen. I think naturally at some point in time. So I guess, like you said, Billy, like what can you possibly do amongst all of this? Because I think if you start trying to analyze every single thing of what's going on there, like gold price, what's that going to do, or AI, or Bitcoin, or these conflicts that are going on around the world, like you get analysis paralysis. You'll be probably thinking the world's going to be imploding anytime soon, and you're probably going to feel pretty shit in your overall life if you're thinking about
Yes.
all of this stuff. So look, it's a lot of noise. It's a lot to sort of digest, but I think the key there would be, which we'll get to a bit of, what would we be suggesting or doing at this point in time? Really, the key there is around that diversification piece. That's really the only way you can protect yourself in all of what's going on is basically staying diversified. And if we keep moving on, if we figure out sort of bringing this all altogether, Billy, around, with big tech dominance we've spoken about. Property is probably one to mention a bit about as well, because I was down in New Zealand. I was chatting with some pretty big property players down there, and they were saying prices have fallen 20 to 25% in New Zealand in the last 12 months and beyond. So if you
Well, I
compare
care
that,
about that because in Australia, it's like, oh, that doesn't happen here. We don't do that in
yeah,
Australia. It's
yeah,
only ever up, right? And
yeah,
that's rubbish. It can happen. Doesn't matter where you live.
yeah, and that's where it's going to
Property
be.
prices go up and they go down sometimes too.
Yeah, no, Australia's just kind of got that sort of blasé property always goes up and everyone loves property. But, there are a lot of different dynamics as well around,
Yes.
supply and demand and how much building there is and the amount of, migration and people that are moving to Australia. So it is propping up in a way, but it was interesting to kind of get a different perspective. And New Zealand, I think, went first I think they were one of the first to take interest rates up, and they went up quite
hard,
quick,
yeah.
and then they come down quite quick. So I think their cash rate's quite a bit under us, but it doesn't look like the property market's doing much anytime soon. But maybe we don't spoil the beans there, Billy, as well, because you've just done a podcast on property recently as well with a good friend of ours, Kev, who's a buyer's agent, where you're going to be diving into a bit around property. But look, property's not immune to that volatility as well. I think the only difference is it's not valued on a daily basis, which is why a lot of property investors don't get so worried, don't you think?
Okay, and so why did prices? I have my theory just based on what I've read, but why did prices drop 25% in New Zealand based on your conversation?
Well, the conversation went between a lot of different areas, I will say. So we didn't stay on the topic too long, because then we flew over into politics, and then we were talking about a lot of different areas. I'm just trying to pinpoint what was the key points that they went through. Obviously, there was the interest rates going up at a rapid rate, which hadn't had happen here. Sorry, no, we did, but our prices actually went up through a lot of that. There was a piece there around. They've had a similar thing to us around the oversupply of apartments. So they also had they had a lot of that. There was a piece there around migration, but I don't want to talk out of line around what some of the specifics were. So if I could pull up all of my notes, Billy, I'd be able to give you exact. Well, I've got way too much in my mind. But what have you read on your side?
I think it was population growth. Yeah, it's just that's what was my read on it, because similar happened in Canada. And Canada and New Zealand have had the same argument as Australia when up until a couple of years ago, like property prices are growing because of supply and demand, and it's going to keep going and blah blah. And then in both Canada and New Zealand, they had a year of where the population did not grow.
Yeah.
And property and rates went up and property prices fell. It just seemed like a simple supply and demand question. Whereas in Australia, we still have a chronic undersupply. Population keeps growing. Houses are not getting built. It's pretty simple.
Yeah.
And we already loved property. So
yeah. Well, you've seen some good growth in the last couple of years. Like some of the growth rates, around, ridiculous over the last couple of years in certain pockets of the property market. But look, we won't spill the beans on that one, because there is a podcast that is going to come out diving.
So a little spoiler alert was the main dynamic in Australia at the moment is the demand is primarily sub $1 million, because most households just can't afford to spend more than $1 million on a house. That seemed to be where we should be looking. So.
Well, that doesn't surprise me, because I've got quite a few clients in real estate, some dealing at the higher end of town, and they tell me in certain pockets, particularly in Melbourne as well, there's a lot of pricing pressure around that sort of 1.5 and 3 mil mark, where you kind of have these professionals or people, feel like they've got pretty good paying jobs, but they've leveraged up, kids are in private school, and they've got a big healthy mortgage here of $1 or $2 million, and so they're feeling these rate hikes like you wouldn't believe, and at the same time private schooling going through the roof, you throw on the fuel and everything else. So there's a lot of supply, I've been told, in certain pockets is going to start coming on the market, so you might see a bit of downwards pressure in certain areas. But again, not every suburb, not every state's the same as well. So what one suburb and state in the same state might be doing, you could go 50 kilometers another direction and it could be growing. So diversification there, I suppose, just as critical. But if we get to closing out, Billy, I guess, key themes around, diversification, obviously critical in a time like this. And, we always use of course, not a disclaimer, but, without knowing your goals and your circumstances, what you should do, we have no idea at this point in time. But what's a general one would be, well, okay, sure, diversification. You're not putting all of your eggs in the one basket. Getting some good advice through these times can definitely help, particularly if you've actually got a lot of money and you're trying to invest, but you just don't know what to do, because a lot of emotion sometimes gets tied into the decision, or analysis paralysis can be a real factor there. And some of the best times to invest can be when there's a lot of disruption and a lot of volatility around. It can actually be some of the best times to accumulate or at least start chipping away. So I think besides that, and other than just remembering, you can't change the weather, you can't change a lot of those factors of what we've just gone through. For the most part, you have no bearing as to what happens amongst any of those, but you can definitely you can control how you're feeling when you're waking up, what you're doing with your time, who you're hanging around, the type of content that you're consuming. Are you listening to the Winner's Playbook, or are you listening to some other boring podcasts?
Yeah.
You control all of those factors, how you show up at work or how you show up your business and how much work and effort you put in. If you actually focused more on those, it would get you through and you'd be able to flourish in no matter whatever the environment may be. But I suppose it's you're productive of your environment, or the other way around. So those would be my key messages, Billy. Anything I've glossed over or missed there that you would add to?
No, I mean, like the events of recent weeks, the only thing I would change with your thinking and strategy is, if this conflict drags on and petrol prices stay where they are, that's going to cause some damage. So you'd be more conservative on your buffers. You would be more conservative if you're borrowing money. And if you're approaching or in retirement, you might, again, be slightly more conservative. But aside from that, no major change. You want diversification. If you are sitting on a bunch of cash waiting to buy a property, waiting to invest in stocks, this year is an opportunity. Because when everyone else is shitting themselves, that's often a good time to start looking to, okay, what should I buy? What should I invest in? What you don't want to do is go, I'll wait till everything calms down. Because when everything calms down, the share market's already gone back up 20%.
Yeah, we've all seen that.
And then you rock up to an auction and yes, there's 20 people bidding. So it is historically the best time to buy and invest is when everyone else is worried.
Yeah, and it always feels like the wrong thing to be doing. And I always use that example with clients when those scenarios occur. A crash is over 20% fall in the markets from, I think, the recent high. If you look at that, it's in a view, if you're buying good quality companies and businesses and investments, I think of it as like your favorite clothing shop or wherever you like to spend money. If they have a discount of 20, 25% or whatever the figure is, you'd probably start loading up and buying more than you typically would at that point in time. But again, it's about buying, quality at the same stage rather than speculating on some of these swing trades like oil price, gold price, what's going to happen amongst some of that. That can quite easily go in your favor, but you can also, for the most people, you can easily get burnt at the same time, because the smart money is usually in early and out at the same time as well, before the average retail investor generally starts to get in. So look, I think we've covered off a lot, Billy. Is there any other closing remarks or thoughts before we close out, mate?
No, I think we've done a good job, and welcome back to Australia. Are you going to stay around long this time, or
stick around? Stick around. No further travel booked at this point in time. Well, we're in our new office in 2 weeks, so I'm absolutely hanging out for that. Nice. I seen a couple of photos the other day. So new office over in Q East is going to be good. Podcast is going to get a big revamp as well at the same time. So no, very much looking forward to getting back into the regular routine. We're already a third of the way through the year nearly at this point in time as well. So just want to get back into it, get straight into the swing of it, and working on the clients, the business and everything there and in between. So no more travel planned at this point in time, Billy. So we'll close it out there, and hope you are all listening, getting value out of what we are talking about. And of course, if anything of what we've spoken about today, if it's relevant for you and you want to have a chat with any of the advisors, just feel free to always jump on the website, take a pic of any of the advisors, and you can have an initial chat at no cost, so they can understand what you're trying to do with your life and whether or not you need an advisor in the first place. But until next time, Billy, enjoy the weekend, mate, and I'll see you then.
Thanks, Josh.
Disclaimer. The information contained in this podcast is general in nature and does not take into account your personal circumstances. Please head to the show notes if you wish to book in a free 15-minute call to discuss your